Hello, everyone. Welcome to this AMA on VC Lab. My name is Mike Suprovici, and I am the head of acceleration here at VC Lab. And I'm joined by Adeo, who is the CEO of VC Lab, as well as the Founder Institute. Adeo, thanks for joining us.
Thanks, Mike. Yeah, welcome everybody. I see people are streaming in, which is great. So we're here today to talk with you about any questions that you have launching a venture capital fund, talk to you a little bit about any questions that you have with VC Lab, the venture capital firm accelerator, and just any questions that you have about, investing and helping startups thrive in your region by launching funds and the like. We have a lot of experience doing that. So just let me introduce myself quickly as more people stream in, and I'll tell you how we can get your questions. But I've been a serial entrepreneur for something like 26 years. About half of that I've been building companies, and the other half of it I've been working on the entrepreneurial infrastructure around the world. I've launched something like, I think it's like 15 funds now, Mike, because this last fund just launched. So 15 funds directly, plus I've helped as advisors, venture partners in other capacities, maybe another half dozen funds. I've launched something called The Funded, which was a pundit on the venture capital industry. And now we're running VC Lab, and we've helped create 83 funds all around the world. So I know just a lot about entrepreneurship, a lot about venture capital. Mike has run our graduate group at the Founder Institute, which has over 5,000 companies. He's run funding programs for those companies. So he's helped them raise capital from investors. And he's also helped me on about 13 of the 15 funds. So I think you're the manager of those 13 or so funds.
Right, exactly. Also, I've helped hundreds of companies raise capital, and at this point, I've helped looking at over 80 VC firms get to a first close, which is part of our program as well at VC Lab. So yeah, I'm happy to share my knowledge, answer any sort of questions you may have, whether it's about the program, whether it's just about venture capital in general. That's what we're here for. And this is designed to be basically an Ask Me Anything type of session. So if you see at the bottom of your screen, there's a Q&A button. Just select the Q&A button, add your questions in there and upload them. And then we'll go through all of your questions and try to answer them. We want this to be free-flowing conversation.
Right. So we're here to give our advice to you so that you can be successful in your endeavor in creating a venture capital firm, learning about how to create a venture capital firm, et cetera. So let's take a step back and just explain why we're doing this as you get your questions in the Q&A below. So Mike and I were working at the Founder Institute in 2019, at the end of the year, we had an offsite, and we're looking around the world, and we have 250 chapters creating startups from Central Asia to Central America. And we said, in most of these places, in fact, most of the places of the world, there's no venture capital at all. Venture capital is highly concentrated in a few cities around the world. And it's run largely by, men and often white men in those places. And there's not a lot of geographic diversity and almost no geographic diversity. There's not a lot of gender diversity. There's frankly it's very concentrated. The problem, however, is that if you're running a successful company anywhere in the world, you need venture capital to grow. So he said, this is a real issue. We're going to fix it. And in the sort of beginning of 2020, we launched something called VC Lab. And the purpose of VC Lab is to lower the barriers of entry so that anyone with reasonable network, good intelligence, and interesting thesis, which is much lower barriers of entry than there was before, have a real shot of creating a venture capital firm that can change the world. But we didn't really want to just do venture capital for venture capital's sake, because candidly, venture capitalists are not the greatest people in the world for the most part. And they funded some of the things that have made the world a worse place, right, on the whole, because it's a lot of echo chambers, like a small group of people looking at a small group of deals, picking what the future is, and it's not really a healthy future for humanity. So we said, not only do we want to help lower the barrier of entry to venture capital, bring more people in the field, but we care that those people are going to fund and work on things that matter. So we support something called the Mensarius Oath, which is an ethical code of conduct for finance professionals. And we make it a requirement that if you come into VC Lab to launch your fund, that you agree to the Mensarius Oath publicly, because we want to help people that want to make the world a better place, right? And so essentially we're doing this because we believe that investors that care, who fund companies that are trying to make the world a better place, is one of the best chances that humanity has to innovate our way out of the many problems that we're facing. And these problems have been compounding. So we're facing really pretty existential crises across the board, but we're hopeful that together we can solve those problems. And that's essentially what the point of VC Lab is. And I see some comments in the chat, which is great, questions popping up. So let me just outline what VC Lab is very quickly for everyone, and we'll jump into your questions. So VC Lab is a 4-month-long program where we take aspiring venture capitalists working on accelerators and venture studios, working on pre-seed or angel funds, working on seed funds, and working on Series A funds. Now we have some later stage funds and we have some other things, but that's the bulk. And that's a bell curve. And the top of the bell curve is over seed. So we have the most seed funds coming through the program, but we have pre-seed, Series A, as I said, everything in between. And over the 4 months, we help you close your fund and build an enduring venture capital firm. For the first rough month of the program, we work to help you refine your thesis. If your thesis is good, about 1 in 5 LPs that you pitch should say yes. If your thesis isn't that good, you're looking at 1 in 10, maybe 1 in 15 LPs will say yes. So there's a big delta to get your thesis right, and it's super important. After your thesis is good, right and wrong isn't a great analogy for a thesis, but it's good. So you're getting 1 in 5 LPs saying yes. You're going to work on your presentation and all your supporting materials in the program to get them really, really good. You're going to ramp up your pitching of limited partners in the program, and you're going to start to get commitments in the 3rd month. And then in the 4th month, we work with you to figure out where to domicile your fund, how to set it up, how to set up the firm, how to think about multiple funds in the firm, all the economics, all that stuff. We work with you. And then as a result, what we're seeing is that the majority of our funds and firms are, or I should say the majority of the venture capital firms that we launch are able to close their first fund or do a first close on their first fund, to be even more precise, in roughly 5 or 6 months. Now, this is unheard of, okay? If you go out today and you try and start a venture capital firm and do a first close on your first fund, that can often take 18 to 24 months. I would say the average is about 18 months. Sometimes you see 9 months if people are moving really fast. So the fact that we're getting people to the first close of their first fund, oftentimes in 5, 6, sometimes 7 months, that's pretty remarkable. Not everybody, some people do take longer. There's a lot of reasons why they do, but at the end of the day, Mike, myself, and the other VC Lab team members are here to support everyone in that closing process, in that firm launch process. And the program provides 3 high-level things in that outline that I just described, and we'll jump into your questions after I cover these. 1, a great deal of structure, so you always know what you need to do next. A lot of times it takes a long time to close because people do things out of sequence and they waste time. 2, you're provided with mentorship and guidance every week by top VC leaders, limited partners, experts in the field, blah, blah, blah. They come in, they talk with you, they answer questions, they help you. So there's a guidance component. And 3rd, there's the most active community you can imagine. Slack is on fire. People are talking about everything, structure, terms, everything you can imagine. So you have this huge community supporting you through every step of the way. And that just doesn't happen when you launch a venture capital firm on your own in the world today. So with that said, let's start jumping into questions. Mike, do you want to read the question and I'll answer them, or I'll punt them back to you?
Yeah, let's go ahead and do that. And if you have questions, please add them to the Q&A. We're not really monitoring the chat or anything, so just add them to the Q&A and upvote them. That really helps us kind of prioritize questions. So what are the hurdles or minimum requirements for entry into VC Lab is the first question here from Andrew.
Yeah, nothing, just apply. Literally the application. So the hardest thing on the application is your 2-minute video. You have to record a 2-minute video. Now, of course, that could just take you 2 minutes, but some people have to prep to make the video. So we're looking for, and if you go to govclab.com and apply, there's some things that we look for in applicants. So yeah, if you record the video on a treadmill, which some people have done, obviously we're not going to take you as seriously if you record the video in a professional environment. The reason the video is so important is that basically you're going to still pitch LPs for the most part through video for the foreseeable future. I was talking, I'm fortunate enough to be an advisor and investor in a billion-dollar healthcare company. Multi-billion-dollar. Anyway, make a long story short, I was talking with the CEO yesterday, and it's going to be an interesting season because you have the flu season, you have a pandemic, you have other things coming up. So I don't think that there's going to be a lot of real world events after some hiccups in the fall. So you're going to meet most of your LPs virtually. So you need to have a professional environment where you can pitch on video and look really strong. And to some extent, we're testing that by asking you to produce a 2-minute video for the application. But there really we don't care about age, we don't care about gender, we don't care about race. We want everyone to be part of the venture capital world. We don't care about geography. We want to see more people all around the world with venture capital funds. So, do your best to get an application in, and we're all going to review it. The team, everyone reviews your application. And if we believe that you can do it, we're going to try and help.
What is the expected time commitment in the program, and how do you make the most out of it? So look, the program is designed to help you to get to a first closing. And what it does, it provides you structure for doing a first closing. So it's not the program, it's what you have to do really to be able to close your firm, right? So it takes a minimum of 25 hours a week, if not longer, but there's no extra like busy work. This is all, there's no theory in this program. It's like, do this, talk to this many LPs, do this on your deck, do this, and that, right? So there's, so think of it more like in terms of, hey, what's the actual time commitment that I need in order for me to do a first closing on my firm, versus this in addition to all the fundraising that you may be doing.
And let me add, so it's not a learning program, it's a doing program. And you will learn because you're going to learn by doing, but it's not like read this great article and then reflect on it. It's like, no, it's like go speak with a lawyer and retain them, and like, okay. So it's a doing program, not a learning program. And that's, we're going to help you as much as we can. And so how you can get the most out of it. Okay. Launching a venture capital firm and closing on your doing your first close on your first fund is probably one of the hardest things that can be done in the world today. Okay. I started with Elon Musk in space, and we worked on space and, worked on the genesis of SpaceX together. And that's pretty hard too. So that's also very hard. That might also be one of the hardest things that you can do, build a private rocket company and launch a venture capital firm. Okay. So it's like that hard. And it's just, there's a lot of regulations, a lot of this and that. So we're going to take you through it, and we're going to make it as easy as possible, but it's still super hard. Right. So if you can accept the fact that you're going to do something hard and just be prepared to weather the kind of rough bumps in the road of doing something hard, you'll be very successful. It's not impossible. Okay. It's just hard. So, and we're trying to make it as easy as possible.
Well, speaking of Patrick's question, would you say it's too much to run a startup and run a VC fund too? Conflict or strategy? My fund model is passive. I'll go run at scale. It's a lot of work. It's yes, it is too hard. It's just too time consuming. The average person that's closing a fund pitches 300 limited partners. Just think about the time required of that, and in addition to you running your startup, which is probably a lot of work. So it's a time issue more than anything else. Even if the actual process that you may have is technically more hands off, the process of raising a fund is very, very time consuming.
So you as a human being probably can't do both. I kind of want to do a fund, but I can't do a fund because I'm like, it's too much work. So we do funds, I should say, but even the funds that we do, like Mike ran them and I helped, right? And we had a whole big team. So if you're doing something else and launching a fund, I don't want to say it's impossible, but you really do need a strong team. You certainly can't run a company and launch a fund alone, right? So if you're the CEO of the company and none of your team can help you, and you're like, I'm going to launch a fund, that is just not possible. However, if you're the CEO of a company and you have a team around you, and you can take 3 or 4 of your team members and say, hey, put 50% of your time on the fund and help me out. And you yourself can put about 50% of your time, so that you're getting the equivalent of 1, 2, or 3 FTEs. I would say probably if it's spread out, you probably need more like 2 or 3, just because one person 100% focused can probably do it working overtime. 2 people, but if you're spreading it out and it's not someone's full-time job, you're going to need more people to shoulder the burden. So yeah, it's possible to do, but you really need to distribute the activities among a group of people to help.
I'm a software engineer who wants to create a fund, but I'm still relatively fresh in my career. How would you recommend moving forward in order to maximize my ability to raise money and build a fund?
Can I answer that? And by the way, guys, upvote questions. So I see there's a lot of questions coming in here. We'll try and answer a little faster, but it also helps us if you upvote questions, because we'll get to the popular questions first. Okay, so yeah, probably the most important thing that you need to do as a venture capitalist, regardless of your background, is have a pretty good network. And that network should have 2 types of things in it: potential investors in your fund, so limited partners, and potential startups that you might want to invest in. So you want to build a network. So if you want to be a VC and you're nowhere, right? The best thing that you can do is start finding the startups that you want to invest in and finding the investors for your fund and building your network in those areas. And if you can get your network good enough, then yeah, you can start a fund very easily, regardless of the circumstances.
Yeah, the best VCs kind of are at the intersection of a really interesting like community and network, right? And some other form of capital potentially, right? And they're able to make sure that they're able to make sure that that money gets to the right companies, right? So if you have some sort of an interesting network of companies that are maybe looking at either you maybe either advising or you're helping in some other way, then you can definitely make a case that look, I see the best I don't know AI companies in this area or something, and I should be able to invest in them. So just think of it
So
like
people so some people that don't get into VC Lab, but we like a lot, we invite to lead chapters of the Founder Institute in their city, and that can help build your local network with mentors, many of whom can also be limited partners or investors in your fund, and with startups that you're going to help start. So then you have deal flow, right? So they're hacks to get there quickly, like leading a chat. A lot, I would say, some of the biggest funds regionally in the world are actually like in Singapore, in the Indonesia, in Australia, are actually leaders and et cetera, are leaders of the Founder Institute that launched funds on the back of the network they amassed running a chapter of our company accelerator. Anyway, let's keep going, Mike.
Yeah, what is the minimum size of capital required to start and run a VC fund and make useful investments?
So this really depends on the region in the world. We've seen funds as small as $2.5 million in like Central Asia to $150 million funds in Europe. So I would say the developing world, you're looking at maybe $2 to $10 million for a first fund. In the developed world, we've seen $5 to $25 million for a first fund. So there is some difference, and I would say globally, I did the math, Mike. Our average is actually about $16 million is the average size of a first fund coming through VC Lab. And normally your limited partners will ask you personally to put 1% of the fund value in as a capital contribution. Now you can sometimes, if you've made investments before, you could put your investments in as a capital contribution. If you don't have the money, you can take an investment into one of the entities that you set up to get the money to make the capital contribution. Or some people just say, hey, I don't have the money, and they ask their LPs that they don't have to put a capital contribution. But you should assume that most limited partners or LPs will ask you to contribute 1% of the fund value. And that gets called. So if you have a $10 million fund, your capital contribution would be $100,000. But you don't put $100,000 all in at once, because you do what are called capital calls. So you might call, let's say, 20% of the capital to make some investments. And so you'll only need to put in 20% of the 1% and whenever you make your capital calls. So it's most general partners can afford to do it. And if you can't afford, I just brought up some tactics to work around it. In terms of other fees, the legal fees and everything are very expensive. We have pretty good deals to bring that cost down at VC Lab. And that gets paid out of the money that you raise. So you don't usually pay your lawyers until after you close. Mike, you want to keep going with questions?
Yeah, we're considering creating a venture studio as a service for family offices. Any advice on how to do customer discovery in a community that is so private?
Yeah, well, LPs, good luck finding LPs. They're very difficult.
Right. I mean, so you should find a family office or a couple family offices, right? And start building that, talking to them about it there, right? And see if that actually makes sense, right? So you want to start with 1 or 2 family offices and see if this is something that's interesting to them. And then, family offices, right? They get pitched a lot by a lot of different uh, general partners. I mean, there's 100 people in this webinar, and probably, I don't know, half will probably pitch some of these family offices, right? So you really want to start with a process with, just pitching 1 or 2, and try to understand maybe what are some of the issues, or what are some of the reasons why they maybe don't invest in some of these firms, and then why a venture studio may be able to de-risk some of those investments or something like that. That's what I would do as a first step.
Yeah, it's an interesting concept.
Yeah.
But what I would say is that, yeah. And the other thing you can do is, once you find a family office in your network, or 2, as Mike suggested, and you pitch them, you can also ask them, like, hey, do you think anyone would be interested in this idea that I could talk to and see their thoughts as well? And that might work very well. Christine, we went over the program at the onset of the call. So if you could ask a more specific question, there's an outline on the program under govclab.com/schedule. It shows all of the sessions and weeks and the things that we're going to try and do. At the end of the day, though, the expected result is that you close a fund. So in order to graduate from VC Lab, you need to close on capital for your first, or some people are actually working on their second or third funds, but close on capital for your fund. So basically complete a close for your fund. And so that's a graduation requirement and expected result.
Do you have any advisors on where to base our VC? Delaware, Mauritius, Amsterdam. Does our LP portfolio determine where our VC is based? Yeah.
Yeah. All right, good. So because we just published the domicile report. So guys, maybe you could post a link on GoVC Lab. I'm very proud of this. We're one of, there's nothing like this in the world today. We did an analysis of where people form, and we looked at the 83. Now, we didn't have data on all 83 alumni, because some haven't chosen a domicile yet, but we have data on 73. So we show data, we do analysis of where to form, and that's all available in a domicile report. Again, kind of first of its kind on govclab.com, it's awesome. Now, here's how domiciling works. So basically, you're going to start pitching LPs, and you're going to get roughly, let's say, 10% of your fund hard circled, which means you have signatures that they're interested in investing, and another 10 to 15% soft circled, which means they've told you they're going to invest. Now, so that's 20 to 25% of the fund. Once you have that, you're going to send them terms and where you think you would like to domicile, but the LPs may come back and say, no, I don't want you domiciled there. I have a tax issue there, or I can't do investments there. I'd like you to domicile here. And you're probably going to do what your LP tells you, especially if they're putting in a big chunk of the fund. So our recommendation is to, if you're interested, read the domicile report, pick a domicile even, and we're going to be putting a lot more information out about domiciling over the next weeks and months. But this is what we have there is like amazing, and took months to make. And read about it, think about it, maybe even pick a place, but don't do anything until you have roughly 20% to 25% of your fund soft and hard circled. And then you communicate with the LPs about the domicile. And then at that point, you pick your final location to domicile the fund.
Yeah, and this is one of the areas where where a lot of new fund managers tend to go awry and stop. This is one of the examples of where people end up wasting time. And that's why it's taking so long to close, because this is one of these things that really doesn't matter until you get to 10 to 20%, but probably closer to 20% of your firm, hard circled, right, in commitments from LPs. And then you start this process, you start the incorporation process, you start all that stuff, right? Please don't waste time incorporating your fund or anything like that until you get to that point. Because
I'll take that one step further, Mike. If you're talking to a lawyer right now and you don't have 10% hard circled and 10% soft circled, most of the fund formation lawyers cost, minimum $1,000 an hour, but you might get lucky and get someone for like $700 an hour, so you're just like chalking up legal bills without, and then you might have an LP come and say, oh no, I want you to domicile in the Caymans, not in the US or whatever. And now you burned, thousands of dollars with a lawyer. And we see this happen all of the time, right? That's why closings can cost like $100,000, $150,000 and up, right? Because early new managers speak with lawyers too soon, rack up large rates, and then, and so, we're going to ensure you don't spend crazy money on legal, which is our goal, among many goals. Anyway, let's keep going.
What's the process like starting a VC fund in the US as a US resident for startups, markets elsewhere in the world? Is this something that VC Lab has experience in?
Yes, we've formed, we've actually helped form 4 funds to help learn and build a service for formation so that we can simplify the process. 3 of the 4 funds are from outside of the US, and it's the same process. Basically, it can be a little bit more complicated to get some tax IDs and bank accounts set up, but it's not that much more complicated. It might add like a day of time. And the US is already one of the fastest and least expensive domiciles. It's also the most popular domicile in the world. If you look at the domicile report, 52% of our graduates of VC Lab have chosen the US as a domicile, but yet only under 30% of firms that we've graduated from the program are in the US. So obviously a lot more people are choosing the US than are based here. So it's very popular. We have tons of experience doing it.
I want to set up a 5 million pre-seed fund in Eastern or Western India. What's the minimum amount I've got to contribute to the fund, and how many LPs are required? Any minimum, maximum? And do the LPs have to be accredited investors? All right. So, look, I'm not super familiar with the accreditation laws in India, but I could say.
Well, I think the first thing, Mike, hold on. The first thing is a lot of Indian funds domicile outside of India, right, in Singapore, and so then now India's like a Pandora's box of issues. So let's leave India out. So a lot of Indian funds are domiciled outside of India. And a lot of Indian funds are domiciled inside India. So the first question is like, are you inside India? Are you outside of India? And a lot of that will depend on your LPs, because you have a lot of rich Indians that are expats, but they may not want to invest in India for one reason or another. So then you see popular domiciles like Singapore for India, but you also see India being a popular domicile for India. Generally speaking, with a $5 million fund, the number of LPs is, you don't want a lot of LPs. So with the 5, but you also don't want one LP, right? So somewhere between 1 and a lot is the right number, right? So one LP, like one day that LP doesn't want to back you anymore, you're in deep trouble, right? So you want to have some diversity in your LP base so that it's not just 1 or 2 people, but you also don't want like 100 people, because then you're running a crowdfunding campaign every time you need to do a capital call. So I would say, your ideal number of LPs, and very few people hit this in their first fund, would be somewhere around 25. I think most people in their first fund sort of come in at like 50 to 75 LPs, which is a lot of people to manage, but preferably you can come in at the 25 to 50 range, and then it's a much easier process for you. As a rule of thumb, in professional fundraising for venture capital funds, you want to be aware that there are going to be accreditation standards, which means that, and this is true pretty much everywhere in the world, that the investor must have a certain amount of money or a certain amount of assets. So you should understand what your local accreditation laws are. But as a rule of thumb, if they're rich, I would say, 7 figures in assets, they're going to pass most global accreditation laws. The second thing is that there's usually marketing restrictions. And that means you can't publicly solicit. So generally speaking, I would avoid anything that looks like public solicitation anywhere in the world when you're raising for a venture capital fund, and you want to privately network, find LPs and pitch them. And that's universally good advice, whether you're in India, Europe, America, South America. Just if you follow the guidelines, pitch only rich people. Don't publicly market it. You'll generally fit within most of the security regulations that are out there in the world today.
I'm pretty far down the path to create a fund. After 30 years in global health tech or global tech industry, I launched a firm. I have held the first close and made several investments. My biggest focus right now is increasing the fund size from the current 1.4 million in AUM to at least 10 million. Which is the target. How can I expect my fundraising for high net worth individuals and family offices?
Well, so look, that's a very good question. It would be nice to know, generally speaking, give us your location, because a lot of advice is location specific, but I'll give a general answer. You're in a very common area. So you've done a first close. Actually, that's pretty good. That's a 14% of your target fund size. So that's in the strike zone of what I would consider quite good. And now you're operational. So what ends up happening is there's kind of 2 phases of a venture capital fund. Pre-operational, when you're just like, I'm going to start a fund, but you don't have anything, and post-operational, when you do a first close and you're starting to make investments, right? So it's much easier to pitch LPs post-operational. And in fact, Mark, one of the things I would recommend is you can go back to LPs, even LPs that said no, and said that you've done your first close and you've started to make investments, and you'd be surprised. A lot of them will actually say, oh, wow, that's amazing. Let's engage. And even though they might have said no before, they said no to a pre-operational fund, and you are now different as your post-operational. So that's just one small tip. Second tip is, what you need to do is make sure that your first investments are extremely on thesis, okay? And you want to try and get deals that have markups in a short period of time. And then what you do is you sell your markups to investors that you meet with. So once you are operational and you have markups, finding high net worth individuals is much easier, because you say, look, I've done my first 3 deals. 2 of the 3 deals have raised capital. When you look at the markups across the 3 company portfolio, on average, we're at a 2.7x. So if you put money in today, you're going to get like a markup immediately by investing in the fund. And that is a very compelling pitch. then what happens is if that person says, well, it's not interested for me, you can say, well, do you know anyone who might like this? And they're like, oh yeah, I know John or Sally or whomever, they would love it. Let me make an intro. So once you're operational and you have markups, it becomes a lot easier. Let's keep going.
I'm an angel investor. Can you address shifting from angel to VC? Good question.
Do you want to take that one?
Yeah, so we have a lot of folks in your shoes, Adam. So basically what happens when you go into a VC, you now have a firm. So you become essentially a professional money manager for your limited partner. So you run this kind of like a business. So therefore, you have to think about more things than just like, hey, do I do this deal or do I not do this deal, right? It's about, how is this going to affect the entire fund? How is this going to affect my returns for my LPs? Right. So you really have to kind of think about all those different things, who's going to join my team, if anybody, right? Those are all things that you really want to think about when you do that. So it's basically a professional thing. And this is something that you essentially do as a career when you do a professional as a firm, when you make this actual transition from angel. So think of it in terms of like this is like as a career kind of move. Right. And then you're going to have generally a thesis, and that thesis is going to say, like, these are the types of deals that I'm going to do. So as an angel, you're like, oh, this deal looks interesting. Boom, I'll just give them money. Oh, this is interesting. I'll give you money. Well, when you have a thesis, you kind of want to stay on thesis with those for 80% of those deals. So you're going to be doing very specific deals with very specific founders and things like that. So it's, it's a different kind of structure there. But that's what VC Lab does. We can help with that.
Okay, guys, upvote questions. I was scanning the questions in the chat. We've got a lot of questions in here. So hit the little thumb up button and then it floats up and we'll definitely get to it. Okay, we'll try and answer a little quicker. So Paolo's like, what's in it for you? Goodwill and love. So look, we don't charge anything. We don't ask you for anything. If you like the program, share it on social. There's tons of stuff on social because people really like the program. So yeah, and then what we do, like, how do we make money? So we have some services to try and help you, and we charge for them, but we actually we're losing money on them. So we're not actually, like, technically we're losing money by trying to help you. But yeah, so we're doing it right now, at least for the foreseeable future, to try and, as we said in the opening, help and, enlightened and passionate people who want to make ethical investments into our future, fix the world. And, we hope that will lead to lots of, and, the good news is that a lot of people want to make VC Lab and Mike and I venture partners. There's lots of opportunity, but we're not doing it for the financial opportunity. We're doing it to help. And if financial opportunity flows, fine. But right now, the program's free, our help is free, everything's free. So yeah, there should be no cost to you to work with us in starting your fund.
Is the application expected to come from individuals, MDs, and GPs of the new VC, or from existing organizations willing to expand, accelerators, venture studios, etc.? So it will come from individuals, and this program is designed to help individuals launch their own enduring venture capital firms. Okay, so that's what this is for. So if you want to start your own enduring venture capital firm, this is a great program for you. If you're employed by an organization and, like, you're running a corporate VC fund, for example, this is not a good program for that.
It's not, we do have, to be fair though, some people in that category have gone through and been successful. But to Mike's point, our primary audience are what we're calling next generation venture capital firms, which are one or more managing partners, possibly some team members that are launching a firm. But we have had success with some entities. We have a big entity in Egypt launching a fund in the current program. But anyway, we can keep going. How does deal warehousing work for first round? So this is a very good question. So essentially, the proper, there's lots of definite, this is one of the problems with venture capital. There's like deal warehousing can mean like 10 different things. So the most accurate sense of what a deal warehouse is that you make an investment into a company, usually personally, like an angel. That investment is very similar to what your investment in the venture capital firm would look like. And you move that investment into the venture capital firm and fund when you start the fund. So you move, and that usually is considered part of your capital contribution that we discussed earlier. So that's your classic like definition. In addition, deal warehousing can mean that you intend to invest in a company once your fund closes. And so as soon as your fund closes, you're going to wire money into the company. That's another kind of deal warehouse, and probably the industry should have separate terms for that. And then there's a bunch of other kind of foofy things, like some people will do an SPV. So let's say their closing is here, but the deal is here, and they have these LPs and they know the LPs really, really well. So they'll say, I want to do this deal right now. The fund won't be set up for another month or two. Let's do an SPV and come into this. And sometimes people refer to those type of deals as a warehouse as well. That's starting to leave the tight definition before. So some people will say, oh, I had a warehouse deal and we did an SPV. So that would be a third way to define it.
Do you feel that by stating the part of the problem is like white man perspectives that will limit the FI VC from being able to provide spaces for returns, especially if you're publicly stating that you want to create a better world? How does acquisitions and not in the game and what's not in the game of traditional VCs look like?
Do you have a reading problem?
Yeah, it's a long question. Yeah.
By the way, also try and keep questions a little shorter. That makes it easier. Yeah. So I guess what you're trying to say is like, okay, first and foremost, right now we're somewhere between 20 and 30% of the GPs and are graduating are women and women-led funds. So I think it's it's below around 25%, just a little under it. Now we want to obviously see that go up further. We faced this problem at the Founder Institute when we first started like 12 years ago. There were very little women starting tech companies. It's worse in VC today. 4% of all venture capitalists are women worldwide, and that hasn't changed in a long time. And the number of funds run by women's even a smaller percentage. So look, the time has come for change, right? So we're changing it. It will change. And yeah, people invested in crappy things that make our lives somewhat miserable, like Facebook. And here we are, and we need to invest in beautiful things that make our life better, and they'll generate better returns. I think that we need, the old model is broken. Okay. And I don't need to look any further than most of the world is also broken. Right. So anything, and clearly the old model funded a lot of the things that we're using in the current world today. So let's just fix it, right? Make it better. And there's no reason we can't fix it and make a lot of money. And it's that the making money, fixing things and are not mutually exclusive, right? We should be able to fix things, make money, and live a much more prosperous life on this planet. We're in harmony with the world around us. So
does your support extend to Europe and how to set up a VC firm in Europe because there's regulations and legalities?
Yes, we're very familiar with Europe. You can look at the domicile report, and it actually has a chart. Now we've helped a number of what would you say? I think it's 35% of our the alumni funds are in Europe, and we're very familiar with the Europe regulations, the pre-marketing regulations, the post-marketing regulations, where to domicile, and the program will help you through all that.
So for any other folks asking like, hey, what about this? What about LATAM? What about this? Look, the last cohort, we accepted people from 62 different countries. This is a global program that was designed to be global from the ground up. Okay, so we have a lot of experience in all of these different areas, just because we've run, we're multiple cohorts of this program now.
Yeah, 62 countries is pretty diverse. So we're big in LATAM, big in Central America, big in Africa, big in the Middle East, big in Europe, big in Asia, big in whatever that area that the Australia and New Zealand's called. Big. So, all right, let's keep going.
What's your feedback on raising capital for emerging markets in contrast to established markets? Well, look, you're going to have to do more educating on the asset class, right? Because a lot of the limited partners, there are potential LPs there maybe don't have that much exposure to venture capital. So you generally have to educate more on how venture capital works, why this could be a really good return and all these other things. So that's the main difference, I would say. And it takes more meetings, whereas the average GP in a like I said, a non-emerging markets maybe pitches, I don't know, 300 LPs, you may have to pitch 500, right? So let's just think of it like that. So it's a volume game too.
Venture capital as an asset class today is performing very, very well. And the sort of the great irony is the best performer in the asset class are new managers. New managers are you, right? You either have experience or don't have experience in venture capital, but when you set up a new venture capital firm, regardless of your past experience, you're considered a new manager. Now, it's a strange thing. New managers, this is actually, I understand why, but it sort of makes no sense. So new managers have by far the best returns. Like there's a fund that had like 283x or something like that. It's a top performing known fund in the world. There are probably other top performing funds better than that, but it's public. It's lowercase capital by this guy, Chris Sacca, and he was a new manager, and new managers get these crazy good returns. However, traditional limited partners, pensions, endowments, corporations, all the sort of things that you think of investors in funds, sovereign wealth funds, things like that. Most of the traditional limited partners do not, by charter in many cases, invest in new managers, because new managers are like, don't know what they're doing, but they invest really well. So it's funny that you don't know anything about the venture industry, but you're a great investor. So one of my goals will be to try and get some of those traditional limited partners to look at new managers. But anyway, let's keep going with questions.
Is the program a place to help find structure for a fund? I have been working on this on some for the last 4 years now. Yes, that's exactly what it is. We provide you with the best practices in a very efficient way, so you don't waste time on things that don't matter and focus 100% on the things that matter and to get you to a first closing. And again, a requirement for finishing the program is to close on money so you can start investing in companies. Offering advisory services to portfolio founders, can or should this be done and charged via a separate company, i.e. a studio?
No, guys, like, look, we're here to help. And like, we try to help as much as we can. You should be here to help. I mean, I'm not against charging, but it's weird to like charge someone to help on one hand and then invest on the other hand. That comes off a little bit pay to play. Like if you're going to come in as the investor, then be the investor and help as much as you can and just really try and make this company a success. In fact, I'll take that one step further and say that through the VC Lab program actually will push you to go out and find amazing companies and offer to help them for free to build the trust of the founder so that you can eventually invest in the business that you believe in and are trying to help. And then you put your investment in and you're going to try and help them after the investment as well. And you really don't want to have this scenario where it's like they feel like they need to pay you for help. You know, what if you're doing such a good job helping them and they really like you that much, the CEO has a lot of tools at their disposal they can give you a discount on the round. They can give potentially advisor shares, which sometimes might run afoul of your limited partner operating agreements. But what I would say is like help because you believe in the company and you want them to succeed, and don't worry about getting paid for it. Your payment will come in the success of that business through your investment.
Do you have any suggestions about models for the structure of an open-ended fund as opposed to a typical 10-year fund?
Yes, so they're called evergreen funds, not open funds. That's the industry term, but I know what you mean. I hope. Like I'm guessing you mean an evergreen fund. So an evergreen fund is like you can put money in, take money out, and they last forever. Don't do that, okay? I can't tell you how many. So unfortunate, I don't love the 2 and 20 model. Okay, but we're reinventing the legal stack for venture capital, and we're going to be publishing our documents for free for everyone to use to set up venture firms everywhere in the world with a modern legal framework. A lot of the legal frameworks are quite old and Byzantine, to say the least. So, but and I don't love the 2 and 20 framework, but it's like universally accepted among LPs. And what's not universally accepted among LPs is evergreen funds, et cetera. So you're going to not only like pitch your fund, you're not only then how you have to pitch yourself, and then you have to convince them to do an evergreen fund. It's like a nightmare. So you want to take away hurdles to your own success, and an evergreen is a hurdle. So just don't do it. Let's keep going, because I want to try and speed through these. I'm answering.
Yeah, there's
slowly.
2 questions here. Do you take shares in the firm in return for the program? The answer is no. It's a free program.
Now, some people want us to be venture partners in their funds, and we're looking at maybe supporting that. We don't have. We talked about doing it with a few people, but we don't even have an agreement. So we're not opposed to being venture partners in funds. We just don't have an agreement to do it right now.
I'm a lifelong entrepreneur to successful exits. What jurisdiction would be more suitable to start a small fund in, given my education or lack of? Estonia, UK, thank you. Your LPs will tell you that, okay? Your LPs will tell you that, and don't worry about it until you get 10 to 20% of your fund.
Both of them are pretty tough jurisdictions right now, by the way. UK has a lot of regulations and it left the EU. So it's like, unless you're really in the UK and you've got UK LPs, you wouldn't do the UK. And Estonia is in the EU and it got slammed with a lot of crypto stuff. So it's moving very, very slowly in the months. So I would, those wouldn't be my top 2 choices in Europe. I would be like the Netherlands and would probably be my first choice in Europe right now. But these things change day to day as well. And as Mike said, just listen to your LPs and they'll give you direction. Yeah.
How do you connect with at the right spot to get the right people in?
You got to know the people that so there are 2 types of people, team and LPs. So LPs is just going to be like a hustle, and we'll help you with tools in the program on how to do it. But a nutshell version is you're going to find connectors that know lots of rich people, and you're going to build relationships with the connectors, and they're going to help you get intros to LPs. In terms of team, you have to know the person for years. Really, if you don't know a partner of yours for, I would say, 5 years pretty well, don't make them a partner, candidly, because you're going to work with these people, and I'm not even mildly exaggerating, for a minimum of 15 years. Okay? A minimum of 15 years. So if you don't think you can work with that person for 15 years, then don't work with them. So you can make them a venture partner, you can make them an advisor somehow. There are lots of other roles for them. But once someone's a partner in your firm, you're going to be with them for 15 years.
Maybe we do one final question here.
I love this though, Mike. This is like my favorite pieces of the day. Like, can it just last forever? No, okay, well, how about 2 more?
2 more questions. Okay, so we have already initiated the process of setting up a fund, and we have a company registered. Can VC Lab still be relevant to us? Does the program introduce us to LPs? So yes, we have a number of firms in your position in this current cohort, and we've had firms that have already done a first closing, so that's perfectly fine.
You have firms on Fund 3.
Yeah, exactly. We've even got people on Fund 3, exactly. And then does the program introduce us to LPs or investors? So no, it's not designed for that. That being said, because of the program and the community and so on, it's pretty common for either some of the folks in the program. We have fund of funds that are in the program, for example, and things like that, that you may find.
You're going to meet LPs in the program, but that's not what we offer. Right. And you might meet 5 LPs in the program and you need to pitch 200. Right. So it's like, it's not like now, eventually we'd love you to meet 50 LPs in the program, but right now it's more like 5. And, again, we're not, it will happen, but it's not like the key value of what we're trying to offer. All right, one more. How
fixed is it the traditional 2 and 20 and carry structure? We're looking at 2 and 25 due to other parties involved in Fund 1 with more aggressive sunset dates, like 8 years.
Okay, so here's what you can do. So this is pretty common. In your first fund, breaking the 2 and 20 is really like, it's you got to be pretty awesome to do that. I mean, it's possible. It's like, like I was the top VC at Sequoia and I'm breaking out to do my own fund. So I'm going to do, 3 and 30 or something. So you have to be like super awesome to break the 2 and 20. But I'll tell you a hack. You can do 2 and 20 and kick it up to 25 if you get like over 3x. So you can say like, if I return over 3x, every dollar after 3x, I get 25% carry. That's something we see with new managers that can be done. In terms of the 8 years, it's not the years that matter. It's the ability to like get your portfolio to exits, and 8 years is fast. Like it's taking 10, 12 years pretty commonly in most funds, and you're going to sit on portfolio companies past that. So you can say 8 years, but no credible LP will believe that you're going to return all their money in 8 years. Now, unfortunately, Mike and I actually do have another call to go to, but otherwise I would probably stay on answering questions. So these are really lovely. Why don't we do this, guys? We'll do it again. Because I enjoy this, Mike. Why don't we even do another one soon, and we'll make sure to try and get everyone's questions again. This was super lovely. Thank you for asking all the questions, and hopefully we have a chance to work with you in the program when it starts.
Terrific questions, everyone. Thank you so much. We'll let you know when the next one, when we launch the next one, and there will be definitely another webinar. If you're interested in applying, go to govclab.com. That's govclab.com. There's also a whole bunch of details there, the schedule and all these other things. I saw some things in the chat about
and we're publishing information there to help.
Yeah, like templates and things like that. Yeah, exactly. All right.
Bye, everyone.
Bye.